Andrew Hanlan, Senior Economist, Westpac. So it's certainly been a very eventful week, and it promises to be another eventful week for the Australian economy and Australian markets. The most recent update on Australian inflation, the Q1 CPI, came in well below expectations. It was certainly a headline-catching number. The headline figure saw prices fall 0.2% in the March quarter. The annual rate slowed to 1.3%. Importantly, core inflation or underlying inflation rose just 0.2% in the March quarter. That was enough to see annual inflation or annual core inflation slow from 2% to 1.5%. Importantly, that's well below the Reserve Bank's band of 2 to 3% on average over the cycle. The markets have reacted. It's now priced 50-50 that the Reserve Bank will lower interest rates when they meet on Tuesday the 3rd of May. Westpac Economics still expects the Reserve Bank to remain on hold. The Reserve Bank has indicated that low inflation provides the scope to ease policy should that be appropriate to lend support to demand. We still think that the balance of evidence suggests that the economy is performing reasonably well, despite the softer CPI number. The business surveys, the labour market numbers, all suggesting the Reserve Bank will probably hold on to its forecast of economic growth at 3% for 2016 and 2017, a pace that's a little bit above trend, and which suggests that inflation pressures will start to increase as we go forward, and that inflation will move back into the band by 2017. Turning now to the federal budget, which will be released on the same day, May 3, we expect to see some improvements in terms of the budget figures. What we're seeing is for 2015-16, the MyEFO forecast, the mid-year forecast, was for a deficit of $37 billion. The indications is that despite weaker revenues in terms of company tax and individual collections, what we are seeing is lower outlay. So the figure for 15-16 is still on track and could actually come in $1 billion less than projected. Going forward, what we're seeing is that for 16-17, we'd expect to see an upgrade of the economic growth forecast. So the real economy has been performing better than expected. Commodity prices have bounced in 2016. That should see an upgrade to the iron ore price, an upgrade to the terms of trade, an upgrade to nominal GDP growth, and that'll flow through to the bottom line for the budget. In terms of the key themes in the budget, the Prime Minister has indicated the key themes will be around investment and infrastructure. We'd expect to see some tax measures encouraging investment by the small business sector, as occurred in the May 2015 budget. We also expect to see an announcement of a new infrastructure body, which would be encouraging investment in infrastructure projects that could cover some funding, including from the private sector. In terms of the funding of new measures, all new measures in terms of taxation will be offset by other tax measures, which will be integrity measures, such as higher taxes in relation to thin capitalisation rules, in relation to superannuation, in relation to taxation of cigarettes. In terms of expenditures, the government has indicated that all new measures will be fully funded. So certainly next Tuesday, the Reserve Bank and the federal budget will be the key focus for markets. Later in the week, we'll also get updates on retail sales and the trade balance. Thank you.